be on expected lines. But let's get some more clarity. Amit Dixit of Edelweiss joins us. Hi Amit, thanks so much for joining in. Wanted a couple of numbers first. There has been a bit of a correction in China as well. But what about India export steel prices? That's HRC exports from India. There has been a correction. If you could quantify that.
Yeah, hi Nigel, thanks for having me on the show. So steel prices, particularly Indian export prices, if you look at the correction, it has been more meaningful this week. It has been almost $70 a ton. So it has been 7% correction week on week. So current price is at $920 per ton. I'm talking about export price from India. And this is by far the lowest price in the region. If you compare it with Far East price or even if you compare it with Russian price, this is the lowest price prevailing.
Okay, and the factors that have led to this price correction, I guess, Russia will be pushing out a higher amount of volumes. Chinese prices as well have seen a fair correction, isn't it?
Yeah, so Chinese prices have seen a correction. In fact, it started all from there. So Chinese steel prices have seen a fair bit of correction, and now they have stabilized at roughly $940, $945 per ton.
Okay.
And Russia is a big factor here, because Russia, as you rightly mentioned, that they are going to impose export tax of 15%. So therefore, there is a flurry of exports that might come in the month of July. And that is what is keeping buyers on their toes, essentially. So that is the reason why there is correction. Now, as far as Indian prices are concerned, which is the correction is a little bit more acute, the reason being that because of domestic demand weakness, most of the flat players were actually directing their sales in export market. But now they have to compete with Russia, they have to compete with China. So therefore, they need to push out sales volume, and therefore the prices have dropped. Because domestic demand still remains quite tepid, in my view, and that has led to the correction primarily.
Okay, all right. So, the basic number that we always try to understand is what is the cost of domestic steel and imported steel? We are still at a discount. How much is that now?
Also, that discount, for example, landed cost of imports from South Korea and Japan are around 28% higher. Even from China, they are roughly 25% higher. But that really doesn't matter. So there are no imports. Now, the major factor here is exports. So we were exporting actually all this while at a good price. But now with this correction, export prices have come very close to domestic price. Yeah. And if you add together the freight component and the fact that, the vessel rates are also higher, so, this might lead to some of the producers actually directing their sales in domestic market. And that could intensify the competition and therefore lead to lower domestic prices as well.
Will that surprise you?
We have seen,
we have
seen the traders.
Go ahead.
So we have seen the traders market reflecting some of these things. So if you look at traders market, HRC price on average is already down to 65,500 odd, which is like almost around 4,500 per ton correction in last 6 weeks.
Okay, but this is not surprising, right? I mean, getting into a seasonally weak quarter, or seasonally weak a couple of months, you're expecting that to happen, right? A bit of a price correction. For the year, what kind of a price assumption you have for steel?
No, so for the year, price assumption still stays very healthy at around, our estimate is around 59,000 rupees per ton for HRC. But I'm talking about the entire year, assuming a correction in this quarter, correction in next quarter, because, the prices of steel that we have been accustomed to seeing in last quarter are not what we have seen in our entire lifetime, so as to say. So these are the peak prices. But nevertheless, if you look at even when we build in the correction and our base level of HRC, well, I believe, and with the fact that these companies are quite low on debt, and you might see some good debt reduction in this quarter also because prices were quite high. Yeah. So there would be cash flow accretion. So, you are looking at companies that are in a far better shape from balance sheet perspective than what they were maybe a couple of years back. And 59,000, mind you, is not a very bad level either. I mean, the previous high in India that we saw, leave GFC, I mean, the previous high was 49,000 rupees. Yeah. So we are still building around 59,000, which is quite a high level, by the way.
Okay, all right. So the the bottom point is that we have corrected from around 70,000 rupees to around 65,000, but still most analysts are expecting, they're working with a number that's much lower than that. So that won't change estimates, even if we see a bit of a price correction in the domestic market. Final question, Amit, what's your pick? European markets have been pretty strong. Prices there are holding up. United States as well, prices are holding up out there. So what's your pick of the pack?
So we have only one buy in ferrous space, and that is Tata Steel. And that is mainly because of the turnaround that we see in Europe is going to sustain. Two factors. One is, of course, the higher prices in Europe and the fact that they have extended safeguard duties by 3 years. So clearly, the price environment looks a lot better. And the second thing is that these prices, spot prices, get reflected in contracts essentially. So you will see the sustenance factor also of higher prices in Tata Steel Europe. So therefore, our top pick remains Tata Steel in the space with a target price of 1,300 rupees.
Okay, all right, Amit, how things changed, right? At one point of time, the big trigger for Tata Steel was go ahead and sell Tata Steel Europe. And now, in fact, everything is turned around. Suddenly, because they have exposure to Europe, that business is doing well. There's offtake as well, and there's pricing strength as well. And with this additional duty that's put in, prices in Europe will stay elevated for a longer term. Tata Steel, in fact, is the pick that Edelweiss has, and keep an eye out on that stock. Well, we'll slip in a short break. On the other side, we'll try to trade the index. Jet